Hello, everyone, and thanks for joining us for today's special mastermind that we have going on with Mutual of Omaha, discovering the Mutual of Omaha Edge. They have some great, listen, over the last several months, we've been increasing our business with Mutual of Omaha thanks to Mike Marasco and Tim Whitmarsh over at Mutual of Omaha. And they are really doing some things special, not only with their products, which are phenomenal, but also when it comes to underwriting and getting stuff done. So I was really impressed, and I really wanted to bring them on to introduce them to some of you guys, so that you guys can also experience some of the things that we are and some of our advisors are experiencing over at Mutual of Omaha. So with that said, I'm going to hand the reins on over to Mike Marasco with Mutual of Omaha, as well as Tim Whitmarsh with Mutual of Omaha. Over your guys.
Thanks, Louis. Hey, everyone. Thank you for taking some time out of your day to learn a little bit about Mutual of Omaha. We're going to focus today on our IUL, but just know that we have a great relationship with the best agency, Louis, and those people there. So you guys are working with a great brokerage operation, and just want to let you know that we really enjoy working with the best agency. Anyway. Just to start moving forward, Mutual of Omaha, we have so many different products and things for everybody to choose from that you have a lot of options for basically anything that your clients could hope for. We like to look at it as, we have everything that will carry a person throughout their entire life, for basically from when they're 14 days old till the time comes where we're using a final expense product to settle up all the final expenses. So just know that, everything from fully underwritten IULs and express, long-term care, final expense, cancer, heart attack, stroke, accidental death, everything we have that you have access to. So the main focus for us today is going to be on our IUL portfolio. We came out with these products a while back, probably about 4 or 5 years ago, and they're extremely well priced. We are very much the low cost entity that is out there. We don't have multipliers and things of that nature within our policies that affect expenses. So, and everybody knows, zero is always the hero in a IUL scenario, but expenses do get taken out. So we understand that, and we are well positioned that way. The other thing that I need to stress, and I think it's really become evident lately, is Mutual of Omaha uses a portfolio money approach. And this is pretty unique in the industry. And what this allows us to do, it allows us to still maintain stability in our policyholders who have purchased policies in the past. So they're getting the same crediting rates on the in-force business as they're getting on new business. So that's a big deal. And I would encourage you, if you've want to take a look at that, if you go and take a look at some in-force IULs with some other carriers, you're going to see that the in-force business has really probably paid a little bit of a price with these new money rates. We do this for cap integrity. We want consistent performance over the long haul. We're a mutual company. Our policyholders own us, so they are always our top priority. We publish our cap rates and everything. You can find that on discoveriul.com. And it is wonderful because you will see everything that we have done historically. And again, one other thing to keep in mind, Mutual of Omaha has been in business for well over 110 years, and we have never increased cost of insurance on life policies. So that is something that we really stand on. So you can see the overall value proposition behind the design of our products. So in this instance, we have two IUL products. One is a protection and one is an accumulation. They are both low-cost IUL designs. The protection product has a death benefit guarantee to age 90. These both include some riders on there. One is the guaranteed refund option rider. This is for people who are 60 or younger when they purchase. This allows somebody to surrender their policies in years 20 through 25 and get a 100% return of premium if they feel that the product hasn't performed. But that's just the first part of that Grow rider. We're going to talk about a little bit further how you can utilize that rider to help with some other designs and ways to use that rider to really maximize that benefit on there. We do have an at-cost, fully underwritten long-term care rider, and that is going to be reflective of a true long-term care policy that we have on our standalone. There is a cost of that. If somebody doesn't choose that rider, we always have on these policies for anybody who buys this policy, a chronic illness rider, which allows somebody to access 80% up to $1 million of benefit if they can't perform two ADLs. And with Mutual of Omaha, there's other companies that have this chronic illness rider, but they will limit it to maybe age 75 or a table 4 rating. With Mutual of Omaha, we do not have a age limit or a rating limit. If somebody buys this policy, that rider is on there. And again, we keep this simple. We have a very simple design on our products. We have one index. It's point-to-point crediting methods. You can see the three types of crediting strategies that we have. You're going to notice that on the Life Protection Advantage, that's the protection product. So the participation rates are going to be roughly the same, but the caps are going to be a little bit lower. And again, we publish and these renewal rates, so you can see the whole history that we have done on these. I'll talk a little bit more about this long-term care rider. It's available on both of them, but it's really probably a better choice on the protection product. That is available in every state except California. For some reason, California seems to have issues with anything and everything that's long-term care, and I don't know why. But that is what it is. This is a reimbursement rider, so it's going to be actually operate just like a traditional, fully underwritten long-term care plan would. So this is going to give somebody, access to all or a portion of their death benefit to be converted for long-term care expenses. If for some reason the person is declined for this rider, this will automatically revert back to that chronic illness rider that we discussed. Now, when we underwrite for the long-term care rider, we don't farm that out to our long-term care area. It is still underwritten on the life side, but you could potentially have two different offers. So just be aware of that. You might have a standard offer on the life, but you might have a table 2 on the long-term care. So just be aware of that. And again, with this rider, it's, this is an upfront cost. There's no discount. If you are interested in this and your customers looking anywhere from $1 million to $1.25 million face amount, use the 4% benefit payment instead of the 2% because it costs the same and the benefit is better. One really key factor on this too, in the world of fully underwritten long-term care, I'm sure a lot of you have heard out there that, prices always seem to be going up and there's always some rate changes on that. On this product, the cost of the insurance is guaranteed not to increase on this rider. So that's a nice little selling point. Once somebody is receiving the long-term care rider benefits, we're going to waive the charges for that rider, but they're still going to have to pay on the life insurance side of that. So again, they can access all or a portion of the death benefit in this matter with this rider, and any unused portion of it is obviously going to be paid out as a death benefit protection. If you want some more generic information, take a look at that site down there, the www.Mutual of Omaha long-term care rider. That. Now I want to get into some of these living benefits that are on there. So again, we talked about the accelerated death benefit for the chronic and terminal illness on here. And again, this allows 80% up to 1 million. In California, it is capped at 500,000. Okay. And this is going to be a rider that is initiated by somebody who can't perform two of the six ADLs, or if somebody has a life expectancy of 12 months or less. Now, the thing about this rider is there is no upfront cost on this. It is part of the contract, as we discussed. There's no underwriting and there's no age or table rating limits on here. What I will tell you is this is a very good rider if you are working with somebody, let's say, who has some type of a condition that's not going to allow for a long-term care policy. People who maybe have hip replacements or, some instances, if people have MS or some of these other type of diseases where they can still qualify for life insurance but never get a a policy for long-term care. This is a very good safety play for them. It certainly doesn't replace a true long-term care, but it still is going to allow somebody access in the event that they come upon that due to their chronic illness that they have at some point in the future. So keep that in mind. So we're going to talk a little bit more about that guaranteed refund option rider. Okay, it's like we said before, this allows somebody who is 60 or younger who buys this policy to have access to getting their surrendering the policy in years 20 through 25. They can do it in year 15 and get half of it back, but we put that on there honestly when back in the day when GUL was a big deal and Transamerica came out with that, so we decided to add that. But we hardly see anybody utilizing that. But we price our products at the $1 million bands. So let's assume you have somebody who has a $2 million need just for simplicity. If they bought one policy with us with $2 million, they and wanted to take a look at having that rider for the chronic illness, they would be limited to 80% up to $1 million on that. But using this grow rider, they can split off of one application and buy two $1 million policies. All they would have to do is pay the second policy fee. And now they would have two $1 million policies. So at 80%, that's 1.6 million that they would have access to. So there's some things to do about that. Or maybe they want to have one with the long-term care rider and one without to kind of save on some of the cost. In that case, they can do so. Also, if you think about it, if somebody is younger and they're buying two $1 million policies, maybe 20 years, 23 years or whatever, when their kids are in college or out of college, maybe they don't need that full amount of coverage. This would allow somebody to surrender one of the policies, take that money back out and put it into the other one. Or they can say, listen, I don't need the full 2 million, but let me have one of the policies and just have a paid up reduced face amount. So there's some options to be done with that. I wish that we would have some more marketing materials on that to understand how to work with our writers, but we don't. But please note there are a lot of opportunities with the writers in there to help design a specific need-based type of solution. The other thing that we want to talk about is we have a very big press on stress testing illustrations. In IUL, a lot of people go out and they will put together an illustration and sell it. Now, there's nothing wrong with that per se, but if you're just selling off of illustration, uh, sometimes an illustration is just a snapshot of what could possibly happen. We encourage people to stress test their illustrations. And what I mean by that is simply run them at lower rates so you can see how the expenses in these policies affect performance over time. So in this particular case here, we have a male who's 45. He's a preferred non-tobacco, and we're putting 25,000 in for 15 years, using an increasing death benefit for 15, and then taking the index loans beginning year 21 for 15 years. So you can see here at the maximum amount illustrated, a lot of the carriers, we're in the blue line here. These other, all the other carriers, they do a pretty good job of getting up to a pretty decent amount of, cash buildup. But as you take a look, when you use 5%, 4, 3, 2, all the way down to 0, and look at the impact that the expenses have on the withdrawals, you can see where those really come into play. Even with us at 0%, we're still distributing some cash out of there. For the protection, this is also pretty interesting. Same type of scenario. In this case, we are looking at a 65-year-old preferred non-tobacco, and we're solving for premium to carry to age 120. Now, obviously, we're a death benefit to age 90 guarantee on here. But as you can see, if we're running at 5%, we're going to hit up to pretty much run to age 107. And then down at 0% even, we're still going to hit age 93 because we are paying the premium to get to that guarantee. But you can definitely see the impact that performance has over time, not using just the illustrated rate. So it's really an important key for you to stress test and see how things are going to perform. We have some underwriting programs that also kind of help with getting your customers some credits. The first one is our FIT program. And this is really something that we put together that with reinsurers write-off. It's a crediting program that's going to give credits for different things like being, physically, you're going to the doctor on a regular basis, you're taking your medications, you have a good driving record, you haven't smoked or used tobacco, things of that nature. So this is really intended to help somebody get from a table 4 to a table 2 or a table 2 to standard. There is nothing that you have to do or provide. We find all of these credits in the normal course of underwriting. This goes up to age 75, and it's for both fully underwritten permanent plans as well as our fully underwritten term. And we roughly about 85% of the folks that we get in we're finding credits for. We also have an accelerated underwriting program for, again, our term life answers and our 2 fully underwritten IULs. This goes up to age 60, 18 to 60, up to face amounts of $2 million. There's no random knockout questions. You have to use a speedy ticket or through a drop ticket through iPipeline. The thing about this is if we see something that comes up on an MIB or anything like that, we're going to still transition that into fully underwritten. What we try to mention to folks out there who are selling is, I think this is a good opportunity when you're looking at these $2 million needs in that age bracket to let somebody know, listen, we can probably get this through an accelerated underwriting, but if there's something that shows up that's going to continue to go through fully underwritten, I always look at this as a one of those situations where you can, under promise and over deliver. I think sometimes if people say, hey, look, we'll just automatically put this through accelerated underwriting, and it doesn't go that way, then people get a little bit disappointed on that. But I like to look at this as a way to say, if everything's good, we can get this through accelerated underwriting. That's just my view. We also came out with a fluidless underwriting program, and we just recently did this, and this is going to be for applicants ages 30 to 65. They need to be U.S. citizens or valid green card holders, and this is really for people who are taking like an annual executive physical. It has to be done in the US or US territory. If they do that within 18 months, we can do face amounts from 2 million to 5 million. If it's done within 12 months, we'll go 5 million to 10 million on that. And again, this applies for our term life answers and our all of our fully underwritten life policies. And just so you know, this is something always, we like to kind of talk about some of the recognition that we do get, but we have been recognized by a lot of folks for being, not only a great insurance company, but very good in the IUL arena and just everywhere. We've really taken that approach to really step up and become a carrier that you can feel proud representing. And with that, if anybody has any questions, we'd be happy to entertain those.
Mike, we had a question earlier in the chat regarding the ages of the for the IULs, and Tim, Mike, you can correct me if I'm wrong. But the ages are 0 to 85 in most states. There are some exceptions where it begins at age 18. But most states, for most of the IUL products, are 0 to age 85. Am I correct on that?
Yes. Yep. 0 to 85. I would say also add over age 80 has to be standard
Yes.
only.
Yes.
Yeah.
Yes. So, and I'll make a note, the guaranteed refund option, and once again, please correct me if I'm wrong, Tim, Mike,
Mhm.
they get the greater of the cash surrender value and what the refund option is at that time. Am I correct on that?
That's correct. Yeah. So you would expect the cash accumulation to be better. So
Correct.
it's just so I would also add to that. So like a lot of like buy sells and key man, kind of designs. Um, those businesses like to see that opt out, other than, have an out other than death. So that's also, so if you have a key man or a buy sell, that's a good selling point with those businesses.
Very much
Gotcha.
so.
Yeah, gotcha, gotcha. And again, the fact that you're getting the greater of and the
Right.
product, if it does what it's supposed to do, and with the low policy charges, and if you stress test it, like we mentioned,
Mhm.
your cash surrender should
The cash
be
surrender should
better.
always be, better.
Yes.
And typically, we also understand that there's a lot of the consumers out there who, especially in the markets as they are today, are always a little bit concerned about the ultimate level of safety. Now, we always say zero is the hero, and that's great. But this also is another layer of protection for somebody who thinks, okay, well, if it hasn't really performed, at least the least I can do is get my premium dollars back. And we're really the only ones who offered that on there with that rider.
So, Ms. Douglas, I'd be more than happy to demo an illustration for you. We can schedule some time together to go over that. We can't do it today just for time constraints. But I'd be more than happy to go over an illustration with you at a later time, if that works with you. All right. Are there any other questions? LTC? Are you Holland? Are we talking about the LTC rider? Just to confirm before we answer that, yes. So what are the age limits for LTC when you're doing the rider?
I should have been prepared for that. Hold on, let me check something out here. I'll get that real quick.
Yeah, I was going to say, I know that it's that rider, I believe it's 75, Tim. Is
I
it not?
believe that's true. I just want to
Yeah,
see it with my eyes. 30 to 79.
79. I stand corrected.
Yep.
So that's a good thing.
Yes.
So, any
And
other
just
questions?
so everybody knows, on that long-term care, we took a while to come out with that. We actually had a little bit of a struggle with our internal partners because of we offer a standalone long-term care policy. And they thought we were going to be kind of, taken away from them with this rider because this rider mimics fully underwritten benefits and everything. It's wonderful. Mutual of Omaha is a leader in long-term care, and this rider is basically the same benefits as our standalone. So they do a terrific job with that.
Awesome. Awesome. Any other questions out there that we can get to this afternoon? Looks like you did a good job, Mike. We had a few questions, but it looks like we answered them all here. I want to take the once again some time to say thank you for joining us this afternoon, Mike, Tim, and all the advisors that are on the session today. Thank you very much. We look to have another session and go over some of their simplified issue products. They have some really great simplified issue products uh, that we can go over at another time. And hopefully someone in our marketing department will reach out to each and every one of you and answer any side questions that you may have had and just did not decide to ask them today. Mike, do you have anything,
Perfect.
Tim, to add before we close this one?
All I would want to add on that is, we appreciate you guys taking time out of your day to hear about Mutual of Omaha, and we hope that we can actually get a shot at some of the opportunities that you're working on. We'll work hard to earn your business.
Absolutely, absolutely. Holland, you can call the office anytime, 561-241-4500. We're also on the web, bestagency.com. I would ask that you guys register. We'll get you activated as soon as possible, and you'll have all the tools and resources you need at your fingertips there at bestagency.com. And if necessary, and you had something that I did not have, I am not shy at saying I don't know the answer, and we can get Mike and Tim on the phone at any time,
Absolutely.
to answer any questions that we have. But once again, we do look forward to working with everyone, and I see a ton of people on here that are regulars for Best Agency, and I see some new ones, so I definitely will reach out to all and thank you for joining. Mike, Tim, anything else?
Good. Yeah, I guess I would add if you have any illustrations that you need any help with, need help, figuring out how to optimize or anything like that. I run a lot of them, so don't feel free to reach out to me, Lewis.
Absolutely, absolutely. And like I said, the relationship that we've been able to partner with Mutual, with Tim and with Mike has been phenomenal. And they will do everything and bend over backwards to make sure that you guys have everything you need to make that sale and be comfortable with the process. Once again, thank you very much. I appreciate the time, and we're going to end this session, but rest assured we will reach out to everyone. Thank you very much, and have a great rest of your week.
Thank you,
Thank you.
everyone.